Good morning. Welcome to Stock Market Today. It's Monday, November 9th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show, as well as give you daily stock ideas to consider. That hits your inbox every trading day before the market opens. So let's dive in. Hope everybody had a great weekend. It's Monday morning and we're back at it. U.S. equities were mixed on Friday, though the S&P 500 did post its best week since early April, kind of since the early days coming out of the depths of the COVID crisis for the market. Staples led on the day, followed by technology and materials. Energy and financials lagged the broader tape. Treasuries were weaker with the curve steepening. The dollar was weaker on the major crosses. Gold finished up 30 basis points. Oil was lower. WTI finishing down 4.3% on the day, but it did gain on the week. So obviously a lot of moving parts throughout last week. And then over the weekend, Vice President Biden declared the winner of the election. So that's the landscape as we get to the desk this morning and find futures up 1.5% after that big rally last week. S&P gained more than 7% last week, and the Nasdaq was a standout, up over 9%. Like I said, biggest weekly gain since the initial phase of the rebound from the corona crisis. Asian markets higher overnight with all of the major averages up over 1%. European markets are also extending their recent rally. Treasuries are bid with the curve flattening. The dollar is weaker against the yen, unchanged against the euro. Gold is up 50 basis points, and WTI crude is up about 2.2% to kick us off on a Monday morning. That starts with us, continuing or now playing for the highs while continuing to manage risk. Risk management is always important. It's never not going to be important. What we've been saying all along for SPY is that 320 is key support, and that held. And the market subsequently staged a rebound, at which point regained the 340 level to increase the odds of the September highs coming into play. And for all intents and purposes, based on where we closed on Friday, we're within 8 SPY points, roughly 8 points of those September highs. Same story for the Qs. We were eyeing 260. We said 260 had to hold as key support. It did. And then we moved through 280, which increased the odds that we were going to attack those September highs back up around the $300 level for QQQ. IWM, the small caps, 140, 150 is support, and the early 2020 highs are in play. Remember, IWM did not make a high in early September with the SPY and the Qs. So we're now playing back here for these highs from earlier this year. It seems like so long ago, but it was still this year that the IWM was trading up at higher levels, and those highs are in play. So realistically, a lot of moving parts, right? Election, stimulus, Fed meeting, jobs report on Friday, which came in better than expected. A lot of moving parts, but near-term consolidation within the context of an uptrend. Consolidation within the context of an uptrend. None of that has changed. We'll adjust our probabilities and our odds as we see fit, as new information in the form of price action becomes available. So realistically, not a big change, right? Above 340, above 280, you're playing for the highs for the SPY and QQQ. Let's take a look at our market in a minute now. What are we writing about in our note today to Chaikin Analytics clients? Well, we staged a strong rally on the week with the Nasdaq leading the charge. Treasuries are volatile and remain under pressure from a pricing standpoint. They did get a little bit of a relief rally after the election on Tuesday night and then began to fade. Commodities rebound, gold tests the long-term trend line. The dollar is near the low end of the recent range. We'll take a look at that chart a little bit later on in the show, along with gold. And as I said, futures do point to a higher open here today. As we look at the major indices from a power bar perspective, as I said on Friday, they all improved on the week. Chaikin power bar for the Dow, 3 bulls, 3 bears after the Dow lost 24 basis points on Friday. SPY, let's call it flat on the day Friday, 138 to 81 bulls to bears there. Nasdaq slight outperformer, actually up on the day. The only one of the majors to finish higher on the day. 28 to 12 bulls to bears for the Nasdaq. Small caps were your laggard, down 80 basis points. 714 to 269 bulls to bears. Bonds down tick, sending yields higher on the day Friday. They were volatile certainly on election night and then the days following. Still trying to carve out a base. We're watching the 10-year yield very closely here. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major indexes across the board are mixed. Now let's hit our stock of the day. See an interesting setup here. I've commented on and written about the fact that Asian markets are exhibiting relative strength on the global stage. If we've looked at the Chinese markets, we've looked at, now we'll look at Japan a little bit later on here today. But with that in mind, I'm taking a look at Alibaba here, BABA, the ticker symbol, which has a bullish rating in our model. The Chaikin Power Gauge rating for BABA is bullish, as it has been predominantly since the May-June timeframe. Stock is at a strong trend above a rising long-term trend line. Strong industry group, internet, and direct market retail. We know what's going on with that group. We have a stock now that's bullish. It's outperforming the market. A little bit of that intensity diminishing of late with this drop here, but still holding a trend, right? Series of higher lows and higher highs, and continuing to outperform. Money flow been persistently bullish for the most part since the May-June timeframe, and we're oversold. Overbought, oversold indicator actually beginning to move higher within the context of an oversold position. So this presents an interesting setup to me. I think Alibaba is a name that warrants some attention here in the near term, certainly warrants some extra work. If you're looking for ideas, take a look at BABA, featured here on the show today, featured in my note for clients. Stock did close at 299, spot 95 on Friday, up 4.25% on the day. Take a look at BABA if you're potentially looking for bullish ideas. Let's hit our sector tracker now, the movement of the major sectors over the last 5 days. Tech, solid rebound in the tech space. Tech and comm services have come under pressure in the near term for a few reasons. Number one, a little bit of the growth trade coming off. Number two, prospects for increased regulatory risk. I think those regulatory prospects have probably diminished. The risk prospects have probably diminished if it turns out that we have a divided legislative branch. Remember, Congress was getting set to kind of come after some of the big tech and comm services names from monopolistic practices. Maybe that comes off the table with a bit more of a divided government. At least that's the bet that investors seem to be making, as tech was the strongest group on the week over the past 5 days of trading. Healthcare also had a solid week, along with materials and comms. Industrials, discretionary financials are middle of the road. Staples, REITs, Utes, and energy at the bottom of the list. So this is, I would call this a solid board if I was playing poker, right? Green across the screen as it relates to performance over the last 5 days, with the right kind of leadership at the top. And your defensives towards the bottom, right? So we have everything kind of going up over the past 5 days, but your defensive groups like staples, utilities, to some degree, real estate lagging, while your more risk-on offensive groups like tech, healthcare, and comms are at the top of the list. So throw in the fact that our two favorite cyclical sectors, materials and industrials, are also, in the top half of the group. And I guess I would call that a bullish board, if you will. Our industry in focus, insurance services, over the past 6 months, been a slight underperformer, lagging the S&P 500 by about 1.6%. Does have a solid power bar ratio, 30 bulls to 5 bears. So we'll call that very strong, and rank it number 8 of 21 subsectors. It has actually moved down 3 slots over the past week. So names that kind of could be compelling, could warrant more work. Hartford Financial, HIG, American Financial, AFG, and Reinsurance Group, RGA, all with very bullish Chaikin Power Gauge ratings, but all are holdings of a fund that look like this. Kind of going nowhere since the May-June timeframe. The fund itself has a neutral rating despite that massively bullish ratio. Trend is strong above the rising trend line, slightly rising. I'd call that slope slightly positive. Money flow is abysmal. And it's been an underperformer for more than a year. So I think if you're looking at this group, selectivity becomes really important. But the group, you're probably not going to get a group tailwind the way you would if if these holdings were within a fund that was actually outperforming. So not all that exciting to me, to be perfectly honest. I would be willing to give it time to develop, as I'm always willing to give things time to develop, but not the best looking group. There are probably better opportunities out there in the marketplace, and I'd rather spend my time looking at those. Let's take a look at what's trending. Friday's gainers and losers are movers and shakers, predominantly earnings related. Right, we're still, had a busy week of earnings last week with everything else that was going on in the marketplace at the macro level. Newsday up 8.25 following their print. MTD up 7% on the heels of their earnings announcement. Albemarle ALB, not really anything company specific. I will note that they are scheduled to present at a conference tomorrow. Microchip earnings send that stock higher by 5.8%. CVS 5.75% to the good on the heels of their print. Loser side of the board, FLS down nearly 10%, DXC 7.5%, Northrop LifeLock NLOK down 7.5%, EA down 7%, and Viacom down a little over 6%. All of those were earnings related, with reports either on Thursday night or Friday morning to send those stocks lower on the day Friday. Let's dig in now. The dollar has been one of our key charts that we've been focused on. And remember what I said about equity markets still consolidating within the context of an uptrend. Well, the flip of that is the dollar, which is still consolidating within the context of a downtrend, right? The dollar spiked in the heart of the Corona panic and then has subsequently been weakening over the past few months. And that weakening has coincided with strengthening for the most part on the part of risk assets. So we have consolidation here, and I call it pushing on a string because we are testing the lower end of that consolidation range for the dollar index, closing at 92.22. Consolidation range, lower bound right in play here. The index itself is below the 50-day moving average, below the 200-day moving average. And after trying to stage a comeback, the RSI is now middle of the range at best, making eyes towards a bearish regime. I think a break of this support level sets the stage or provides even more of a tailwind for risk assets going forward. So we want to really watch the dollar closely here. I've been keeping an eye on it for a while. Hasn't really tipped its hand one way or the other, and you can see that in equity markets. But dollar weakness here would likely lead to further strength on the part of risk assets. And in particular, or in addition to risk assets, I think dollar weakness would largely play out with gold resuming its uptrend. Take a look at gold here, the continuous commodity. Retakes the 50-day moving average above the 200-day moving average, and you can see what's played out here. Gold spiked pretty much as the dollar was making its low. Dollar goes sideways, gold goes into a consolidation. Now gold working topside as the dollar is weakened here in the near term, and a break of support for the dollar would likely cause this to springboard higher. At least that's my view. I had been looking for prospects of 1800, but in fairness, or to be perfectly honest, that's not an original thought. A lot of people were looking for 1800 as support. And needless to say, when everybody is looking for something to happen, usually the opposite does. And so far, that appears to be the case with gold spiking higher in the near term. So we're going to continue to watch the relationship between the dollar and risk assets, the dollar and metals in particular, the precious metals, to drive some views here. But right now, it looks like we are in the early stages of a continuation of this uptrend for gold after a consolidation that's been playing out over the past few months. So for those of you who are interested in the gold mining stocks, obviously you want to be paying very close attention to both of these charts here, the gold and the dollar, and their relationship to each other. And then finally, I'm going to leave it with Japan, because my guess is you're going to see this one a lot today. And it's it's really amazing that Japan, the Nikkei, is on the verge, and at this point, just based on what I've seen in the futures market, breaking out of a 29-year consolidation pattern. That's not a mistake. This chart goes back 35 years, and you can see these kind of interim highs here in 1991, big base, and on the verge of a breakout. I think you're going to hear a lot about this one. Remember, I've been talking about, if you've been reading my notes, if you've been listening to me speak, Asia, in particular China, But Japan appears to be going along for the ride here as well. So watch the Nikkei today. The ETF that tracks that is EWJ. So that'll wrap us up on a Monday. Take us for a test drive. I'm back tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.